With world-class expertise and local insight, Dexus creates value not just for today, but long into tomorrow.
From Barangaroo Studios, the AusBiz COB is the key stuff you need to know about the day in business and finance.
Hi there, welcome to the COB. Wonderful to be here with you to start the week on the 12th of May. I'm Nadine Blaney. Okay, so let's get straight to it. We'll check in on how the CIBO Australia Index has closed today, and it was a positive session overall. Look, a real fade happened in the latter part of the afternoon session, as you can see. Why? Well, perhaps it's the lack of detail that's coming through in regards to the supposed thawing of relationships between China and the United States, both saying they're coming to the table and willing to do so. But yeah, again, how much can be taken from a meeting in over the weekend remains to be seen. But what I can say is that it did do good things for the materials space, in particular those that are exposed to the global growth story. So BHP, Rio, Fortescue all did really well. Iron ore prices rising, though gold was smashed. So giving some of that up when it comes to Northern Star, down by 3.5%, Evolution off by 4%. Bit of a mixed picture being painted in the banks. So yeah, everything sort of just faded through this afternoon period. So those trade hopes, I'll get a thought or two from my expert guest coming up, David Scuddy from StoneX. Did markets get too enthusiastic about the prospect of a trade deal coming through between China and the United States anytime soon? I mean, the relative ease of that which was done in the United Kingdom between the US and the UK, I mean, arguably a much, much easier task. So these safe havens got absolutely smashed today, although, as we said, the miners did pick up quite a lot of momentum off just a calming about the real concerns about some sort of a deep global recession coming through. As I mentioned, gold was smashed. I'd say it was the worst performing sector overall, with the likes of Northern Star, Newcrest, Evolution, De Grey's all getting hit hard. If we can go on to some of those charts that we've got, or the final figures that we can show. We've got the gold, as I mentioned, and the miners doing well. BHP, Rio Tinto, Fortescue, all looking good. We've got news that South32 has a pretty solid, sounding at least, succession plan in place. Graham Kerr will be stepping down after 10 years at the helm. A gentleman from Anglo American will be coming in. There will be a transition period. He's currently serving as deputy CEO, and he'll transition toward the end of 2026, I think, or in 2026. Energy doing really well. Again, calming of those trade fears, at least the acute trade fears between China and the United States, helped to push oil higher, and that did good things for the energy space as well. But as I mentioned, the banks not looking crash hot today. NAB, I do believe, is trading ex-dividend. ANZ has a new CEO as of today. And Macquarie Group, I had a good chat with Raymond Chan from Morgans about this one a little bit earlier on. Look, he's calling it a hold right now. Anytime Macquarie is under the $200 mark, he said it's an ad. But you can listen to why they still think it's a quality company. You can find that interview online, ausbiz.com.au. So part of what helped buoy BHP today is reports that it's found more copper than expected at its Argentinian project. We saw Fleet Partners came through its half-yearly result. Now, profit fell by 7%, and there was a substantial drop in new business writings, but it's one of those, it's cycling pretty strong data from the previous corresponding periods. That's why it didn't get punished too much. Woolworths is looking to cut prices across popular items. It mentioned Coke, it mentioned 2 and 20 pies, Greek yogurt, frozen berries. Now, of course, it says that it is just to stay on top of the rising cost of living, to do a good thing, a good deed for its consumers, but it also has been losing ground to Coles, so trying to claw back some of that dominance. Telstra has hired the managing director of Microsoft Australia and New Zealand to head up the InfraCro business, and I already mentioned South32 CEO stepping down. We also had results from Dyno Nobel, formerly Incitec Pivot. It is selling its fertiliser distribution business to Ridley for $300 million. Elsewhere, we did see Goodman do really well today off the back of a broker upgrade coming from UBS. It's now rated a buy. REA down further, 2% drop after a Jefferies downgrade. Don't forget we did hear from its quarterly update on Friday. So again, Raymond Chan talked about this one from Morgan's earlier if you'd like to listen to his analysis. There's Macquarie, last week posted results. The stock is still gaining. And Jefferies has downgraded Australia's Zip to a hold. Shares down today, but again, just talking about all the wonderful guests that we had on AusBiz today. I was speaking with a guest from 1851 Capital, Matthew Arnold, about the Macquarie conference. And what he was saying is that Zip is less of a cyclical story, more of a structural story in the United States. I'd encourage you to go online and listen to that interview as well. He had a lot of good commentary, not just on the conference, not just on stock specifics, but also how they see at 1851 Capital the market panning out over the next couple of months, keeping in mind, we do have interest rates coming to the fore tomorrow. That was Matthew Nicholas from 1851 Capital. Okay, let's get my expert guest live. David Scott from StoneX is joining me. Hi, Scotty, nice to see you there. Look, am I just being too negative when it comes to this China-US? It's not a trade deal. It's just talk of further talks. I mean, did markets get a little bit ahead of themselves this morning?
G'day, Nadine. Great to be back. And you're probably right, at least depending on which asset class you're talking to. When you look across the FX and interest rate space, clearly there wasn't a lot of movement early on. There was a lot of movement in US stock futures. Now, I think the divergence in opinions there probably reflects that there's a lot more enthusiasm at that riskier end of the spectrum. But you're right, we haven't heard the specific details yet, and we'll find that out at 5 p.m. Sydney time this afternoon. We'll get Besant speaking, so keep a close eye for that one.
Right, okay, so I'm just noting that US futures are still going really strong. NASDAQ E-minis up by 2%, S&P 500 E-minis up by 1.5%. So what could happen if there is a confirmation of good news on the trade front? How do you see it playing out on markets? Now, I know you don't have a crystal ball, but you will be looking to certain asset classes.
Yeah, look, it comes down to, at the moment, it alleviates some of that downside risk when it comes to cyclical names in particular. So you think about in the currency space, the Aussie and Kiwi dollars are those ones that you look at. Look at this is the chart here on the screen. This is basically looking at the FX performance going back over the course of time, back to Liberation Day. And the black line down the bottom is the US dollar index, DXY. You can see it's still down around about 3% from that particular date. Lots of gains coming through in the euro in blue, the yen in red, and even the Aussie dollar in yellow. What I suspect that if there's some meat on the bones with this trade deal, we get some specific numbers and a clear de-escalation in those tariff levels, then to me, that's going to go and bode well for the US dollar in particular, which at this juncture in 2025 has to be regarded as being a very risky risk asset. And we saw that overnight as well with that pharmaceutical announcement from Donald Trump.
Yeah, I wonder if that's why we saw some selling in the likes of Telix and the likes of Clarity Pharmaceuticals on market today, because again, that's one of our exports, our key exports to the United States. But when you are looking for and looking at this market technically overall, what are the indications that you're seeing? I was chatting with Michael Gable, if you remember him from Fairmont Equities, and he says it's still looking pretty constructive for the ASX.
It does. It looks okay, but nearer term, I was having a look at the daily counter before coming on air, and I've got to say, it doesn't fill you with a lot of confidence. So we've had a really strong run. No one's denying that. And when you look at momentum indicators at this point in time, they're all still pointing to bullish upside, and that favors buying dips. But we've seen an inverse hammer, or we want to go into describe it as an actual topping pattern. Potentially, if it closes around these levels, a shooting star. And it sounds wacky and everything else, but that's a clear topping signal. And just above 8280, which we know the index has had battles with in the past, to me it suggests that potentially maybe we've gone and bought the rumor and we might see a bit of selling the fact. Of course, no, looking at what's going on with US stock futures, you could probably counter that argument. But right now, from the local market, it suggests that maybe that big solid run we've had needs a bit of a pause for the time being.
Yeah, okay. So today, though, again, you're looking at those different markets, different asset classes in relation to the rhetoric around trade between the US and China. And you can't look any further than what we saw in relation to BHP, Rio, Fortescue as well. I mean, that would indicate that there was some calming of the nerves when it comes to a global recession, correct?
Absolutely, and we saw that as well in iron ore. You could see on just in the lead-in, you're talking about what was going on with the banks. Some of the banks were down, bit of profit taking, and a clear rotation for those iron ore miners. So what we're looking at here, this is SGX iron ore, the other front month contract, and you can see it's been calling up in a symmetrical triangle for the better space of 2 months. Now, convention suggests that it's probably going to go break to the downside, which will point to obviously lower prices and won't be great for the iron ore miners. But today, albeit on the back of pretty weak volumes, we've seen a big move to the top side. It's actually testing that downtrend resistance right now. One way or another, Nadine, I can promise you, just given the chart pattern, we're likely to go and see a pretty explosive move one way or the other. So keep a close eye on those iron ore miners. Should be some good trading opportunities coming up.
Geez, one way or the other, that portends, volatility, I suppose, as well. When you are thinking about safe haven, so we saw the reaction in gold today. I mean, that would be a casualty if Bessent comes out at 5 p.m. and throws a little bit more sort of fairy dust around these potential negotiations between China and the US.
Yes, they're already under a bit of pressure. We saw that really kick into gear again late last week. We saw the first hints about a potential trade deal or a deal to go and start talking about deals more generally with the United Kingdom and the United States. And so that really kicked things off. And then, of course, over the weekend, I think a lot of people were kind of not looking for a lot coming out of this meeting. Now, we might not get a lot, but both sides were really constructive in what was said, which I found was the really unusual thing. I wasn't expecting that. So when you look at those safe havens and you see how far they've run, and you look at what's going on with the US dollar, which potentially could go and get another leg higher if this continues, to me, you look at those combined and you look at the safe haven and you say, well, do I really need to be really heavily hedged now in Swiss franc, gold, and other areas? And I just would go and make the argument that at this point in time, probably not. So the near-term weakness that we're seeing could extend for a little while longer yet.
Okay. Weakness in safe havens, focus on the US dollar, focus on those cyclical assets. We've also got quite a lot of data to go on, not just in the United States, but here locally as well. So in the world that we find ourselves in, clearly we'll be watching that inflation data in the US very closely. What do you think it'll show?
Well, that's the $1 trillion question, because everyone's expecting to go and see the inflationary impulse coming through. To me, on this occasion, rather than being CPI, I'm actually more interested in what the PPI figures have got to go and say, because we're going to get the upstream price pressures, and if there's any tariff impact coming through there, it will be seen there first. So to me, that's going to be the big day on Thursday. When that comes out, it will give us hints as to what we might go and expect down the pipeline in CPI in the coming months. And then just to go and muddle things further, we also have retail sales out in the States on Thursday. And of course, we had Liberation Day in early April. A week later, that was repealed, those are reciprocal tariffs. What that's done to consumer demand in the United States is anyone's guess. It's going to be a dog's breakfast. So I look at this data and I've got to say to myself, well, is this going to be the real primary driver of markets this week? And I'd argue probably not. I still think it's going to be about trade deals. And so keep an eye on those headlines. It's going to be pretty intense.
What are the things, Scotty, that we need to keep in mind when it comes to the Aussie jobs and wages reads?
Yeah, look, it's interesting. Like the wages data works with a bit of a lag. So to me, I'm not so concerned about that, although there is some fleeting evidence starting to emerge that potentially some of those wage negotiations are starting to go and spur higher increases coming through, at least at the EBA level. To me, it's much more important Thursday's jobs report. We know that the RBA is likely to go and cut, very likely to go and cut next week. If we get a really, really weak outcome coming through there, then it does go and raise the risk that potentially the RBA could see itself being a little bit behind the curve and go for something larger. Although I've been talking to a few clients and other people about the risk of that potentially large-scale move coming through. And I think in my career, there's been one instance where the RBA has gone and delivered a 50 where it hasn't been outside some sort of crisis period. So to me, it's much more likely the RBA will go 25 basis points as long as there's not some horrendous jobs data on Thursday.
Yeah, okay. So that is next Tuesday. Looking forward to that. Just a final thought. I mean, I'm still looking at US futures going gangbusters. Why do you think, what is your best educated guess as to why we saw such a fade here locally in the afternoon?
Good question. I suspect what we're seeing is potentially, look around some of the other regional markets. I'm just having a glance up here. They're performing much stronger. So I suspect what we're seeing is a bit of safe haven flows that did go and capital flowed into the local market, particularly the banking sector, maybe starting to go in reverse a little bit now. The pressure on Chinese equities in particular is likely going to be alleviated in the short term. We know that they're already stimulating. So to me, I don't think it's anything much more than that. And you throw in the technical picture I was talking about earlier. It just, the fundamentals, things are very, very stretched from a valuation perspective, and you look at the signals coming through, you know, it screens as being a little bit expensive, and there might be better value elsewhere. That's
Got it. Yeah. All right, Scotty, thanks. Nice to catch up on a Monday. Really appreciate it.
Always great to be here. Take care.
Take care. David Scott there from StoneX. Stock of the day was PEXA, so reiterating its full year guidance, but flagging a bit of concerns around costs. David Lane from Ord Minnett and Josh Barker from RiverX weighed in.
So I think PEXA is one of those businesses that has been in turnaround phase, and we're now starting to see a little bit of positivity as far as that turnaround is concerned. Today's announcement was a bit of a tick of approval that the new CEO has come in and has reaffirmed their current guidance and said that that they are on track at the moment. So, yeah, I think PEXA is looking reasonable at the moment. We've got a buy recommendation and our target price is $17.40 on it. So I think that there is some reasonable upside from current levels.
I think they've got a good foothold in the market, but transaction volumes just haven't really been too supportive of them. So I think this one would be more of a hold. I think it's starting to show signs of that turnaround, and maybe you give the CEO a little bit more time to do so. Not one that I'll be rushing in to buy. It's not one that's really done too well on a share price level since spinning out of Link. So I think it needs a few more fundamental updates to really become quite a humming business anyway. Okay.
That was the stock of the day being PEXA Group. All right, let's get you across some of the market leaders from the session that was really interesting to see. HESTA selling out the remaining stake it had in mineral resources. Share price rising though off the back of that iron ore story. We've got Findi in the smaller end of the market doing all right today. Not sure about the news that's associated with that. Of course, that is into banking systems in India. I'm not actually seeing any particular reason why we'd be seeing Findi rising. Light & Wonder did come out with its quarterly last week, up by 4% today. Corporate travel has been a bit battered and bruised, as you well know, so picking itself up off the mat. And Lovisa, it is up by 3.4% to $27.45. So just keeping an eye on that one. It had a bit of news around a substantial holder being put onto the register. So Nuran Telix, we can assume, might have something to do with the fact that we've got the US President Donald Trump talking about, working to lower prices of treatments in the United States, Evolution and Northern Star clearly in that gold space, Capricorn as well. All right, small to mid cap space, those that were leading the market, 29 Metals, EnviroSuite, and Somnomed on the other side of the equation, lagging this market in the small to medium size. Cyclopharm, actually, down by about 10%. I wonder if there was news. No, that would be the pharmaceuticals story as well. Cosgate down by 9.9% to $1.32. So, what's happening overnight? Well, we are looking at the federal budget balance that will be coming through. Pretty quiet start to the week, though, that is being headlined by that U.S. inflation data and locally the jobs data here on Thursday, 11:30. Tomorrow, though, we do get the consumer confidence index, the monthly index, coming from Westpac. We also get the monthly NAB business survey from April. So really interesting to see any impact of the election, any impact of the tariffs on so-called animal spirits here amongst the business community. We do want them to be investing. We get a quarterly report from Life 360, and I do think we're speaking with Chris Halls, its CEO. And ANZ trades ex-div. Of course, I mentioned that its new CEO took the helm today. If you go on LinkedIn, you can actually see a letter to, I guess, that he published on this marking his first day, promising to become a bigger, better bank. Okay, so there you go. There is the CIBO Australia Index. Really was off to the races this morning on a lot of that trade enthusiasm, perhaps just taking a bit of risk off the table as far as the local market goes. Also, Scotty's saying maybe some of those flows going elsewhere when you've got E-minis up by 1.5% for S&P in the US, NASDAQ up by 2%. And we'll be keeping our ear out for Scott Bessent, Treasury Secretary. Scotty said was speaking at 5 p.m. I didn't actually see that, so I'm glad we had Scotty on to give us the big heads up on that one. It's been good to spend the day with you. I hope you have a great evening. You can catch up with anything online, ausbiz.com.au. If you don't subscribe to our newsletter, the COB, you should consider doing so. You can go to ausbiz.co/newsletters. And we'll see you tomorrow morning. We're live from 9:45.